Hello and welcome back to the RA21 podcast. My name is Aaron and my co-host is Ryan, and we're going to talk a little bit about information and mainstream media today, right? But today, before we start, we'd like to say that we have brought on two very special guests. Some of you might know them because we work very closely with them in our previous attempt to do podcasting, and it's none other than Andrew and Nicole from the Ringgit to Dollar podcast. So, hey, how are you guys doing, Andrew?
I'm doing good, man. Had a flood recently. Haven't been doing contents as much. Actually, haven't been doing contents at all. Let me just clarify that. But right now, everything's starting to fall back into place. Probably will start recording back this week. So yeah, everything is good from my end.
Oh, I mean, our hearts go out to you, like, and every single person who actually was affected by the flood. All of us hope that you're safe, right? And
Mm,
things are
thank
working
you.
out.
Yeah.
Yep. So, how about you, Nicole? How are you doing?
I'm doing fine. Thanks for having me. New year, but not new me lah. Still same old. With my old value investing and stuff. But yeah, excited to be on the podcast. Thanks for having me.
Actually, that's perfect. We need a value investor today. I think that's what kind of a narrative that has been going on. So it's great. So, how about you, Ryan? How have you been doing?
Yeah, I'm doing all right. Just like Nico, new year, but not new me. Still drowning in work. Haven't been creating content as much as I want to. Feeling very guilty about it, especially like Nico. Like Andrew. He's putting out content despite the flood. I really respect that, man. I see like some really good articles put up on his Instagram channel, Rig It to Dollar Podcast. Go check that out on Instagram if you haven't. But yeah, I'm just trying to like survive the death march that I'm about to go into.
Yeah, well, hey, great. It's always great to, have the entire gang together, and also good to hear that, everyone is doing well, lah, or at least like, trying to recover from, forces of nature, right? So I guess, it's actually quite a good thing that we have every single one of you here today because we're really actually going to touch on mainstream media and information sources today because I think it's a pretty timely topic to talk about lah. Because as you know, in the last month, we've had a lot of huge wave of FUDs coming down with regards to inflation. Interest rates are rising, and basically the same narrative pushed on over and over again. So I guess before we actually dive down deep into this topic, right? So maybe the first question is, when you guys started investing, right? What were your first few information sources? So maybe we can start with Andrew.
Well, I actually started investing not so long, quite long, I would say like about a year after Nico started, right? So my first source of investing news were actually Nico. So I learned a few things from him. But other than friends, right? You really just believe what mainstream media says, right? When you first start off investing, that's the easiest way you can get information anyway. So you go to like CNBC, Bloomberg, and stuff like that, and you read. But for Malaysia, you don't do that, right? So what you do, you is go to like the edge markets. That's a little bit more localized. So because I started off in Busa, so I used the edge markets. And other than that, actually started using YouTube a lot as well to understand, to gain the mindset of an investor, because I came from a background that wasn't really investing. My parents doesn't invest, right? They prefer some other ways to get money, which is the casino. I like to debate about that with them, but the other I would say, yeah, YouTube. I started watching a few channels when I first started. Mr. Money was one of them. I actually had the privilege to go there and learn a few things with them as well. Was on their show a little bit, and then I watched Su Yin. Most of the videos when I watched back then was how to think about money, not really how to invest. So that's how I actually first started. So that was the first few information that got me dipping my toes into the investing world. And once you start to have saved up your emergency funds and stuff like that, then you start to wonder like, okay, I have this amount of money. What can I do with them instead of sitting in your bank? I actually had put all my money into fixed deposit. Now I'm like, shit, this is not really the best way. And thankfully, I just put in for like 6 months, and then I brought out my 6 months, and I basically put it into the Malaysian stock market, and eventually I'm here in the U.S. stock market. There, actually, I'm not there right now. So yeah, I'm in the U.S. stock market. Yeah, so that was my first few information. Nico, what about you?
For me, I think I got started right after uni,
Mm-hmm.
and how I got started was basically my dad passed me a couple of books, and it's the classics lah. You know, you have your Intelligent Investor, your
Mm-hmm.
Securities Analysis, Common Stocks and Uncommon Profits. You know, so it was quite hard, I would say, because those are not beginner friendly books at all by
Yeah.
any means. But it was definitely an eye opener. And then, you know, once you start reading books and then you start googling terms and you start looking through annual reports and stuff like that, right? Slowly and surely you will learn lah. But it takes quite a lot of effort if you're going to start out that way lah. I think it's
Mm.
not so beginner friendly. And
Yeah.
then probably after that I moved on and then got into some of Rich Dad and Poor Dad, his
Mm-hmm. Mm-hmm.
books, and those really help you to think about, you know, different types of investment as well, like what, especially the asset classes that he breaks down the four sides, right? um but besides that, I think other content, I would say I do watch Sven Carline's videos,
Mm.
because I think he actually provides quality content and it's quite an unbiased opinion, and he shows his work quite clearly lah. Like you can download his Excel, and he has his discounted cash flow calculators and stuff like that, right? So it's nice to see his content because, you know, I think he puts his money where his mouth is. And for me, that's quite important. I don't want to be, you know, getting information from random strangers on the internet that just say, you know, just do this, bro, just do this. Yeah. So I mean, basically, that's how I got started out investing, and then I think it's just a matter of finding what makes sense to you and then going deeper into that line, lah. Yeah.
That's actually a very good way to go about investing. How about you, Ryan?
Yeah, quite similar to Andrew. I started off in Bursa, so there was a lot of DH markets, reading a lot of DH market articles and news, and but I started investing like we mentioned in the last episode, right? I started off with growth stocks, so it was the growth stock back then in 2020, um, and there was a lot of like FUD going on with the gloves. So my introduction to FUD was relatively quite early compared to like some people who would like invest more properly, because I was kind of like going in for the quick fast track profit at that point in time. So there was like a lot of negative news coverage on the glove stocks and whatnot. And yeah, and when I moved on to Wall Street, the first stock I bought was Tesla. So again, you know, I was hit with like more FUD, but the level of like FUD was completely different. DH market was manipulative, in my opinion. But when we go to like the international stage, we talk about like Bloomberg, we talk about like CNBS. Oh, sorry, CNBC. Oh, well, I just like to call them CMBS because they are. It is what it is, right? But there's a shit ton of like FUD, and then fear, uncertainty, doubt, and then I got into cryptocurrency. So again, you know, there was this shit ton of like crypto FUD on Bitcoin. Not so much on Ethereum, but Bitcoin especially. I think you would know relatively well, Aaron. Um, there's just so much negative coverage, a lot of things that's not true being spread on, you know, CNBC and Bloomberg. So yeah, it was kind of like a rough introduction to like you know content in on investing, but I kind of like moved on to social media or YouTube especially. So I caught on to like some people like Chicken Genius and Dave Lee on investing. Those guys are pretty solid, and then yeah, that's kind of like what I consume most of the time now. And
Mm.
also special shout out to like Aaron and his articles on Instagram. Those are like one of the best articles. If you have not seen them on Instagram, go catch them on at
Yeah.
Aaron Goes Global on Instagram.
Thank you.
Yeah.
Thank you.
Yeah.
Thank you.
Go right now. Right now. Right now.
Thanks, thanks. Appreciate it. Well, I try to do my best. It's actually I actually enjoy listening to all your stories, right? Because um, the difference I guess is I started in 2008. I think I bought my first stock before the crash. I bought Disney was my first stock because I enjoyed as a kid lah. I think I bought it at 16. So, but I didn't really get serious into it until I went to work in 2010, right? So, but I find it very contrasting and very different because when I ask you guys, right, what was your first exposure to content and investing, it's quite interesting to me that actually none of you mentioned that mainstream media as a source of information. And for context for the listeners out there, I'm talking about CNBS, right? Bloomberg and Wall Street Journal, and the articles that you read online. And I'm actually quite curious as to why, you guys don't actually um, focus on the content that's created by these information sources. And I would like to start with Nico, right? Because Nico, I noticed that when you um, shared your story, right, you
Mm-hmm.
focus mostly on books and very reasoned and grounded analysis, which is very typical of a value investor. And you seem to actually ignore the noise quite well. So maybe you can tell us, right? Like, I guess the question for all three is: do you think that mainstream media content does it work?
Okay, I think that's an interesting question because so technically speaking it does work because mainstream media, what their job is to do is to attract attention, right? And I think they do that pretty well in the sense where they have catching headlines and stuff like that, right?
Mhm.
But it works because some of the outlets can actually shift investor confidence in and out of companies, so they have that level of
Influence,
control,
influence that.
influence, yeah,
Yeah.
onto the individual investors' outlook of the company, right? So these people who are, probably not having the time to be able to go through the company's fundamentals or read their reports or actually, do a deep dig into what is actually going on with the company. They just read headlines, they just read a news article, and it changes their perception of the company. So that's it works in that sense, and it can work both ways. It can either inflate a company's what is this outlook, or it could deflate it as well. So they have that level of control, and for me, my belief is normally it's going to just go out to the highest bidder, whoever paid for the article. That's what's going to come out, and that's how it's going to influence others. But yeah, like you're saying, I don't really pay attention to it much because even like on the Ringgit to Dollar podcast, all the time I mention that these people are just like monkeys with a tin can. Their job is just to make noise and grab attention, and it's not really anything substantial that I should actually spend my time on. But what I do take away from media is I tend to just try and separate facts from opinions, and I think it's quite important in that sense because it brings some facts to light. So maybe it might be 80% opinion, 20% facts, but if you are able to separate it and actually find and note the 20% of facts that they're presenting, then I think it will serve you well in the long run. But my advice is just to, not get swayed too much by the opinion of the writer. Yeah.
Yeah.
Yeah,
Yeah.
that's very good advice because we understand that most content creators on the mass media, right? Their KPI is really eyeballs, right?
Mm.
And then it's not just, I would say, mainstream media, but sometimes YouTube as well, because content creators who consistently are under pressure to churn out 3 videos a week, 2 videos a week, or a video every day for that matter. What you actually start to realize is that their content actually reflects um the same tone as they're talking about the same topics as all these big media houses, right?
Mm.
They talk about the same topic, and it starts to get to a point, right, where if you don't, the more consistent and the more frequent that you start to upload videos and content, right, the more you trend with the entire media space, because that's very hard to like escape from lah. You eventually run out of things to talk about. So I think that's very interesting that you actually mentioned that we should separate noise from fact and fiction, and I agree with that because that's really like how we manage to generate alpha. So how about you, Andrew? I'm actually quite curious. Like, what is your view? Like, do you think that mainstream media works?
I think it works in a way. It really depends what you're finding. So when I first started off, right, I was looking for the psychology of money kind of thing, right? And mainstream media, they don't really post that kind of thing. If you go on Yahoo Finance, you don't really find the psychology of money kind of thing. So it never really worked for me in the beginning of time. So I had to go to YouTube and go and search about how to think about money, how to build your emergency fund, this kind of stuff. Mainstream media don't really do these kind of things. They talk about stocks, they talk about the economy and stuff like that, right? So that was that. But I think whether it works today for me, we have to look, the devil is in the details. Nico always says that, right? Many people like to look in the headline, and then there's like 7% inflation. All right, fuck, we're dead, right? And but if we go and look into the details, then it might be something different, right? There is some things in the details. I'm not saying that all articles are good. There are a lot of shit articles, of course, because everyone's allowed to write articles, right? It's like you can just write an article and post it up, and it depends whether it gets upvoted or not, and whether it's famous or not. Either you're a famous journalist or whatever you want to call them, or copywriter or whatever. Right. So it really depends what you're looking at. If it's like when you go to YouTube channel, right? There's a lot of, I won't say shit, weed channels as well. There's us. There are some channels that are really pump and dump. There are some channels that are just really misleading and stuff like that, right? So you have to choose your channels wisely as well. So when you're on mainstream media, you have to choose what you read wisely as well. It's not just reading everything and believing everything. There is obviously a certain agenda there, and you have to be careful of what the agenda is. And to answer that, do I distrust mainstream media? I won't say completely, but I would always verify what I hear from them. And there are a few channels that I listen to, and I would like to verify them as well. And yeah, basically, you have to do your own research at the end of the day. It sounds fucking lame, but well, it is what it is if you want to be, proper.
Yeah, I think that's actually very good. You touched on a very key point, which is verification. It's quite interesting to me that even after investing for more than a decade, that actually people don't really verify what they read. It's quite interesting lah. Just because one person got a call, right in 2008, right, because he has been calling the markets to fall for the last 30 years, and he finally got one right. Then everybody all believes that he has credibility when he was just a broken clock, right?
Hmm.
So I think it's very important that people actually do verify, and you touched on a very key point there because not many people actually do that. Then I guess the next person I would like to ask is Ryan, because for those of you who do not know, Ryan has been on news cleanse, and I think that's very interesting for him to maybe share a little bit of story. So Ryan, like, why did you do a media cleanse, and also like base, and I guess that ties to the question, right? Why did you do it specifically for mainstream media?
Oh, not all mainstream media is bad to begin with, but I would say 99% of them is bad. The articles they put out is bad. So there's only like a 1% where that's like really important, some which you shouldn't miss. But when it's talked about so much on social media, it's kind of hard for you to like miss it. So I kind of like wanted to do this cleanse so that I'm able to like clear my mind and think better. Because I was having like this anxiety, um, as I didn't have that much cash to actually buy the dip in the recent um kangaroo market, whatever you like to call it, But markets has been going up and down, has been really volatile, and I was feeling quite helpless when I wasn't able to like buy the dip because I pretty much am already all in. So I thought, might be good to take a break from the markets. So I did like not just mass media cleanse, but also like content on YouTube, like just a total cleanse in general. And I feel really good after like a month coming out of it. I sound like some guy who just went on a vegan diet and say he's feeling on top of his game, but it's
They never shut up about it, by the way.
but yeah, it is what it is. I'm able to think clearly now. I didn't really catch the headlines, but one of the few headlines I did catch was like that's uh raising interest rates, but that's about it. Tesla hitting their smashing their delivery records again. Uh that was like something, but I didn't catch that. So I missed the 10% up because I didn't even open my app to check my portfolio. And it from like 10% up, it went like 13% down again. So it was like a net 3% down, 3% move down over the week. So what I felt was like a 3% move down instead of like a roller coaster ride, up 10%, down 13%. So yeah, it has been good, really good for me. But going back to like mainstream media, right? To the point where I talked about like not all of them are bad. I actually am quite selective of like the media houses that I um read, at least like after the cleanse. I decided like, CNBS is bullshit, so I'm not gonna read them anymore. Everything that comes up from this media outlet is like Jim Cramer's advice, and also again like Wall Street Journal, that's also a pretty biased media house in my opinion. So I've decided like moving forward, I don't want to see anything from these two media houses. Bloomberg, on the other hand, is I would say, well, there's still FUD, of course, but it's a little bit more neutral and closer to the truth compared to these the other two. Even if like when we're talking about like there are reporters publishing business stories and books, right? I I will always gravitate towards the Bloomberg writers because they write like pretty good books. Like for example, have you guys read this book called Elon Musk by Ashley Vance?
Yes.
Yeah, that was like a really good book. And then there was like another book on Instagram uh called No Filter by Sarah Fryer. Also again, that was like a really good book. I think the things that Sarah reported in the book was quite close to the truth. There wasn't like much additional salt or like sugar onto like the story. It was um it was pretty like close to the truth lah, I would say. And there was not much bullshit, that which is really important. But on the other hand, like there was this book that was published recently by a Wall Street Journal on none other than Tesla. The book is called Power Play. That was a really horrible book. It read like the writer's personal diary of how he's feeling about the stock price at that point in time. Every single chapter, he starts with the stock price, how much has gone up, how much has gone down, what the hell is Elon is doing because of that, and it's just like bullshit. Like as a Tesla investor, I read it, I feel insulted. So you know, um, yeah, just like Bloomberg is like, I think in terms of like quality, it's just much better than CNBS and Wall Street Journal.
Hmm. I think I think Ryan, right? One of the biggest takeaways I've learned from your experience is that it's very important for us to know our emotions when it comes to investing in money. Because even though many people say, and statistically and factually, right, people say that the highest return you can get in investing is to basically have a one lump sum, right, investment and just not look at it for 30 years. The fact of the matter is when you actually put your money down, and if you see your investment were to get hit by 10, 15, 20, sometimes 30, 35%, right, it is mentally quite challenging for, I think, most people, and especially beginners, right, to be able to withstand that volatility, right? And I guess a lot of this, right, is stemming from the fact that there's a lot of media outlets who are trying to gain attention and eyeballs from you, because they will tell you, and they will tell you like, oh, drop 10%, and then they'll come up with some reason. And it's actually quite interesting because I've realized that over the last 11 to 12 years, the headlines never change. They just use a standard template. And then it's always like, oh, worst day record since 2016, 2015, 2018, or just insert the year here. Then investors scramble. But I've read it so often to the point right now, I think I can also write their own. I think I can actually write the headlines for them. Like, without even thinking, like, I don't even need to read Bloomberg to know what's the headline today, then, yeah. So it's quite a standard template, and what I realized that over the many years, right, there's nothing that you really need to focus on apart from, um, Nico mentioned, right, separating fact from opinion. And I think that's very important. And it's also interesting that, Ryan, you mentioned that out of these three media houses, you choose Bloomberg, because actually that's my primary mainstream media outlet, which I actually read. Um, Over the years, I've decided not to also read CNB as well as what's the other one?
Wall
Wall
Street
Street
Journal.
Journal.
Yeah.
Yeah, because there's a lot of words, but not enough. There's a lot of words that's designed to confuse, I find, right?
Mm.
So it's not very lucid when you read it. Whereas if you read
Yes.
Bloomberg, right, they get to the point. You know, it's very straight to the point, and I don't waste time on it, lah. And then from there, I guess I can decide whether or not this is actually like important to read. So I guess Bloomberg does a pretty good job in updating. But I guess also the crux of the matter in discussing this, right, is that I would say that we also need to be able to discern, right, the difference between what is important and what's not. And as much as we say, right, that we would like to just do our homework, buy a stock or buy an investment, right, and then sit on our ass, right, and not do anything. I would say that it's also quite important for us to, um, you know, keep up with information in that investment, right? That is factual. So now that we've established that there's a lot of noise in the mainstream media. What are some of the content sources that you guys actually follow on to be able to get sources which are very narrow and relevant? So maybe we can start with Ryan.
Yeah. So like as you mentioned, right, there's so much noise on social the mass media. So the first thing that I sought after was a source of information that was not noisy, which was factual. So I was pretty lucky. So the first ever YouTube channel that I stumbled upon on investing in like Wall Street was actually Chicken Genius Singapore, Ken. So that guy was like really solid. So yeah, I think Ken from Chicken Genius Singapore is like really solid. There
Mhm.
was like he actually basically broke down like what the hell was actually going on in that clusterfuck thunderstorm, and then dumb it down to like layman level and um tell us that it's actually all right if there's actually an emergency or not. And again, like what Nico mentioned, right? Transparency is like another thing. He posts his trades and whatnot on his Twitter, and then he shares a lot of information with us, which makes him really credible and trustable. But aside from like following the stocks and all, right, I just gravitated into like focusing on the fundamentals instead. So like I primarily invest in technology. So I follow channels that talk about AI. I follow channels that talk about full self-driving. You know, I focus on like channels that talk about like the technicals of blockchain and cryptocurrencies, and just to like up my game and up my level in terms of like the understanding of the underlying technology. So whenever there's like a battery day or like a AI day for Tesla, I'm more hyped for that versus their quarterly reports, because that the this kind of events are like they're showcase of the technology improvement, and from there I'm able to make better decisions, because when I look at the tech and I can go like and I can go and say I'm gonna take a look at what the other experts are saying. I have some thoughts of myself, but I normally just go back to like Twitter, to those people who follow Tesla really closely, like say Davey on investing. That guy, he's got like really good so-called experts that work closely with Tesla on the show sometimes, and that's why I tune into his channel just to understand like what's brewing on the tech side of things. And yeah, and from there I kind of like make my uh assumptions and my decisions on like the growth trajectory of what this tech could bring, say like their battery pack, going from like 2170 cells to 4680 cells. What's that gonna do for Tesla? Like maybe the foundry, what is that going to do for Palantir, that kind of stuff. So yeah, instead of like focusing on the stock itself, I've just learned to like I rotated into like focusing on the tech more, on the fundamental side of things.
Yeah, I think it's so important, right? Because most people, right, they aim to be familiar, but they don't aim to be experts in the investment, right? They try to know what's going on, superficially, but they don't actually dive down into the investment thesis itself, which is so important when you want to have conviction in in the investment that you're in. And I guess the next person I would like to ask is Nico, because among the four of us here, right, you are very narrow. You're very narrowed on value investing, and I guess I want to know what's the difference, because as a growth investor, like what Ryan mentioned, we tend to focus a lot on the tech, the execution, the trajectory going forward. And that attracts a lot of rah-rah lah, as I would say, from mainstream media, because they like to
Mm.
scream and shout about a lot of things. Whereas for value investing, right, value stocks tend to attract very little attention. They are usually very quiet. I know this because I started as a value investor, right?
Yeah.
So I would like to get your side of things. Like when you do your value investing, and you actually like sit down and you invest, what are the type of how do you actually stay up to date on your investment when you sit on it, and like how do you actually follow up your investment, and actually like do you go deep, do you go broad, and how do you actually do it?
Right. Yeah, so again with like the whole value investing thing is quite a wide range. So I'm looking for cheap stocks in basically any market, right? And the content that I need to get is basically content that can sort of more or less guide me into understanding each market a little better every day. So I don't need to be an expert in the market next week or next month, but the people that I follow or the people that I listen to have to be able to sort of guide me slowly into these markets so that I can make better decisions for myself in the future. And like for my investing timeline, it's quite long. It's a long term thing. So I don't really monitor it daily, this activity or, the company's activities. I don't really monitor it daily or even quarterly, not so much. But I do research a lot on their annual reports. So the companies that I'm interested in, I tend to actually go through their annual reports every year lah, and just make sure that what they said in the last report, they actually back it up or followed up with it in this following year. And I mean, in terms of content, right? Because the internet is just a big echo chamber, right? That's how I see it. Like, whatever your belief is, you will find a community on the internet that supports your belief, and all of you guys will be just, echoing each other, right? If you believe that chickens are naturally blue, there is going to be a community on the internet somewhere that they are like, yes, chickens are always blue.
Flat
Everybody else is
earthers.
wrong. Flat Earth, yeah, exactly. So I tend to be mindful on the internet and try to watch what I consume in that sense, because yeah, like I said earlier, people have their opinions and stuff like that. So I tend to rotate more towards content creators that present facts well. They have an open-minded approach to things, and also when they use reliable sources and share the sources openly. So again, like I was mentioning earlier, Sven Carline, right? He presents facts very well, and he's quite open because he talks about wide range of markets, like from car markets to the tech markets, and even into metals and stuff like that. And at the end, also, he does show where he gets this information from. So when I want to do my fact checking, right, it's quite easy for me because either he has left the links for it in the description, or when he shows a screenshot of the report, I can just Google up the same report and I can then make my own opinion on it. So I tend to focus on these types of content creators, and I think that it's helpful in my perspective the way I try to do things are, because like you were asking earlier, how do I keep up with things, right? I don't really keep up so much with the things because I think big businesses move slowly. So I see no point in, monitoring them day to day or week to week. Any decision they're going to be making, it's going to take time, and they have to, approach the boardroom, get everybody's votes in and stuff like that. So maybe on a quarterly period you should monitor, or for me, I choose to just leave it entirely to an annual monitoring. And that's sort of how I approach it lah, in terms of getting content online. Just I try to avoid the echo chamber, and I don't think I'm loyal to any one particular content creator, but rather perhaps something like what Ryan mentioned, also like following experts in their field, just so that I get a better understanding of that particular market and how I want to find cheap stocks in those markets. Yeah.
I think you touched on a very important point. I guess that's really like the difference between the different facets of investing, right? Because growth investing, has always taken the spotlight lah in like more than 10 years, right? Value investing usually, right? I actually echo your experience, because when I started, that's actually how I operated, right? Usually I only like check the company every like 6 months, 1 year, and then there was a period, right, where I was inside value in stocks and I didn't actually check anything for like 2 to 3 years
Mm.
at all, right? Because value investing is really boring. Like, all you need to do
Yeah.
is just sit with, just choose a stock that is, undervalued, fairly value. You get a ROE of maybe like 6, 8, 10%, right? Then you
Yeah.
really don't really have to do anything. So I actually echo that a lot as well, because I went through it. So I actually understand. And I actually noticed that value investing, because a lot of the information is pretty much known, right? So there really is very little change, as you mentioned lah, because a lot
Mm.
of the value stocks, they tend to just operate lah. They just tend to like,
Yeah.
operate lah. Like
They know what
and
they're doing.
yeah, they know what they're doing, and you'll be surprised because I actually did flip the S&P 500 book, right, that was, I think, created in the 1990s, and I flipped through all the S&P 500 books, right. I think about 40 years ago, 20, 30 years ago, and you'll be surprised how many companies, right, actually exist in the S&P 500 today. You'll be
Mm.
able to flip you flip the books in 1990, right, and then you'll see companies like Apple, right. I think they were in the S&P, and then their financials are like completely different from today. And
Yeah.
what surprised me, the stocks which are in the most of the stocks which are still here today, right, are actually banks, which are typical value plays, because their PE is very low as
Mhm.
compared to a lot of the growth markets lah. And basically the person doesn't need to do anything, right, because it's like their banks. I mean, how much innovation can they get, right?
Yeah.
Exactly.
Right.
Yeah.
So I guess that's actually a very good point, and that's why I appreciate Nico being here today, right? Because it really shows the difference between what type of investment style you want to do. If you're the person now who is always like want to have a lot of excitement, you want to have a lot of like being up to date, then where all the so-called action is, right? Then growth investing is obviously more um
Kanchong.
fashionable lah, more kanchong lah, more fashionable lah, and then
The club.
and then and more, and then obviously when you go to that route, right, then you need to expect
Volatility.
volatility lah, because there's no choice lah. I mean, whereas a Berkshire Hathaway, it dropped 2%, everybody all go ape shit already, right? So I bought my first stock in Berkshire. I bought my first second or third stock in Berkshire Hathaway in 2009, right? I don't actually even bother looking at the stock. I don't bother,
There's
It
no point.
wasn't. Yeah, I don't even bother. I don't even read. And then for 11, I think that's the only stock I never look at it for 12 years, apart from listening to the shareholders meeting, right? Because there's nothing that I need to check, because I know Warren Buffett is going to like manage my money. So it's a huge contrast to like being a growth investor, because you need to like every day you need to check, 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 check. So yeah, I guess it's very important from this takeaway, right, that you understand what type of person and investor you want to be, right? Because if you are the type of person, right, who doesn't really want to like check the markets very often, right, then sometimes you just need to choose the style deliberately, because the style does need to match your character. That's
Mhm.
why there's always going to be value investor, there's always going to be growth investor, right? So maybe now we ask Andrew, right? Like for you, because you are also a growth investor, right? Like,
Mhm.
how often do you actually keep up with your content consumption?
Well, to say that I keep up with the content, right, consumption, but it really depends on my mood. So sometimes I feel like there's a lot going on, that I'll keep up with it daily. But if I don't feel like there's a lot going on, then I'm like, all right, whatever. There's really nothing much going on. But right now, I do keep up with the news and all about almost every single day. Except Saturday, Sundays, because there's nothing really going on. It's not the blockchain, right? It's on leave on Saturday and Sunday. But other than that, I really just listen to three people. Back then, I used to listen to a lot of people like Stockmo. I listen to Stockmo, and then he started talking about Ada, Dogecoin, Shiba Inu. That like fuck this guy. This guy is talking nonsense. I'm not gonna listen to him anymore. He's talking cock. Right? If you're telling me that Shiba Inu is gonna like 3x from now, I don't give a fuck, bro. Like it's a shitcoin. Shitcoin will be shitcoin. I don't give a fuck. It might 3x and great for those who have invested. I'm happy for you, but I'm gonna stay away from it. So I stopped listening to a lot of content creators. Like what was that guy? The guy Graham Stephan. No, I wanted to say Steph Curry. That's a different guy. So Graham Stephan, I used to listen to him a lot as well, but I've stopped listening to him. Also, he does know what he's doing, but I think he's more of a real estate guy instead of a stock market guy. So the people that I really listen to is like Tom Nash. I really like Tom Nash. The people that I like to listen to, right, is that they don't give a fuck if they get cancelled tomorrow. Like Chicken Genius don't give a fuck he gets cancelled tomorrow. Tom Nash doesn't give a shit. Meet Kevin doesn't give a shit if they get cancelled tomorrow. They speak their mind. That's very important because if you don't speak your mind, then you're just going to repeat everyone else around you. And you don't want that, right? You want the raw authenticity of the channel. What do they think about the macroeconomics? What do they think about a particular company? If it's shit, it's shit. I have to tell it off to you, right? So that, and it really depends on what kind of contents they put out. Also, it's not every day I would just go sit. Let's just say if they're talking about Lucid, I don't give a shit about Lucid, so I won't click on it. So it really depends on what kind of contents they put out, but mostly it's these three content creators that I like to sit down and just listen to them speak, because I think the way they put their content, the way their mind works is really, it's really how I would think as well. So at the same time, you also can hear what are the negativity things that you missed out, right? So that's what I like to do. Fun fact: back then, when I was in school, in college, I like to teach people because people ask me a lot of questions that I never asked myself. Let's just say we're doing engineering homework or coursework, right? And they ask, "Oh, why is there a negative in front?" And I'm like, "Oh, I didn't know." Then we can go find out. Or a better way, we just don't find out and always put the negative in front. That's me and Nico's best way. But so yeah, that's the answer I would say. It really depends on the contents that they're providing, and really, um, if it's a lot of things going on in the market, then I will keep up with it. But if it's not, the reason why I have to keep up with it is also because I want to produce contents out, right? So that's one of the reasons why I have to keep up with it, lah. If I don't have to produce contents, then maybe I'll do it way lesser. So yeah, that's my answer.
Oh, that's pretty good. Like choosing the frequency, I think is one of the most important things as an investor, right? Maybe now we can ask Ryan, like you know, I know I think you sort of like told us like you cut down your exposure to a lot of this content, right? So maybe could you share like how frequent do you actually like consume content, and why the frequency, and why has it changed over time?
Before I went on the cleanse, it was on a daily
Sounds
basis.
like he was addicted to alcohol or something like that. I'm just saying, huh?
No.
Before I
Yeah,
went to on the cleanse.
I'm on a reform, guys. But yeah, before it was kind of like addiction to alcohol. I feel there was like a little bit of like addiction to keeping up with the news, because I feel it mainly this want to actually go and check what's on the news. You know, that it came from like anxiety. I didn't trust my investments enough. You know, I didn't trust Elon enough to execute. I didn't trust Alex Carp or like Bitcoin to do its thing. So I had this underlying anxiety to like check things so that I know it's kind of like on track. And when it's not, I freak out. And I just thought it was like a really bad thing, because it hit me that it was somewhat like a mild form of like addiction. So to be doing this on like a daily basis, if I'm not working, then I'm consuming some content on YouTube. So be it shit or not, I'm just taking everything in, mass media or not. And it wrecked my mind. I wasn't able to like think properly, especially like when there's like a huge drop, intraday drop, like especially on like Bitcoin, right? I still remember looking at the chart when it dropped like was it like 30 or 50% back in like last May. So I still
Yes.
remember like I was there for like 15 minutes watching that candle, red candle going down, getting longer. Then I'm like, shit, no, fuck. But I was yeah, well, like just like reflecting, right, end of last year, I thought it was like time to make a change. So the first thing I'm gonna cut off was like my attention to these kind of to like investing content in general, so that I focus less on like investing. It's not to say I'm going to stop investing, I will still do my DCAs. Just a matter of like emotional management, so that like for diets, right? You need like a sustainable diet and a sustainable workout routine to keep on going for the long term. So if like I'm going to last this long term game called investing, especially in like growth stocks, then I would probably need like a more sustainable routine moving forward. Something that I can stay sane working on for the next 5 to 10 years. And it just made me realize that when I say like I'm a long-term investor, I severely underestimated the words long-term, because I clearly didn't understand what I was signing up for. Like say Palantir, right? Palantir hasn't been doing so well. A shit ton of people came to ask me what the hell's going on. I myself, I'm drowning in like 30% losses. But after the 4 week cleanse, I don't feel a thing anymore, because my perception of long term changed completely. I wasn't you can't be like looking at the stock or news daily and claim that you're a long-term investor, because that's like very contradictory, to me. So one of my few goals in life, few principles in life, is to live with as little irony as possible. So yeah, that's why I kind of like chose to go on the cleanse, so that I'm able to like create like this routine towards a better mindset for investing, which I really like what Nico said, right? He checks you checks the companies that you follow on an annual basis. I think that's brilliant, because I right now I went from like 1 week to 1 month, and I'm pushing this to become like a quarterly thing. So eventually, probably I'll do it on like an annual basis as well for the stocks that I hold, or and the crypto that I hold. But I just feel that when I stop like going at the news every day, I just freed up like so much brain space to think. So I think better for my investments, like in the long run, I can see Tesla be, I have like more capacity to think about other potential investments. Like recently I'm on Airbnb. I'm just like sitting down thinking about it, reading books about like the business stories of Airbnb, how it's created, getting to know like Brian Chesky, the CEO. you know um that's kind of like the content that I go for now. I instead of like focusing on the stock itself, I focus on like the underlying fundamentals. And it just brings me to this quote by Jeff Bezos, right? I don't want to feel like 30% smarter when the stock is up 30%. If the stock drops like 50%, I'm gonna feel like half as stupid as I am right now. So like, does that even make sense?
Yeah, right. I think you put a very good. Um, I think focusing on the fundamentals is a very good point that you brought up, right? Because it's very easy to get caught up with all the noise, especially as we have mentioned, you're inside the growth sector, right? Then it tends to attract a lot of attention. So I guess like over the years, what I've learned is that it's very important for you to invest, growth investor, but have the emotional control of a value investor, which is what I think most growth investors lack, because they tend to always like feel the compulsion to like keep up with news lah, which actually, if you think about it, if you actually do business, right, business don't generally change that much day to day. There are very key pivots points in time, right, where businesses have to make very large sums of investment and key business decisions that drive the direction of the business forward or downwards lah, right? And I guess like, I guess I can like give you an example, right? When 2007 or 8 came, right, when Apple released their iPhone, every single news outlet back then, right, was saying that companies like Nokia and even Japan, they also came out in an article in Singapore, right, where they say that the iPhone is nothing new. Japanese people will not use it, because they have all the key things. It's terrible, it's shitty. And eventually, what happened is that Apple went on and then like have the dominated the entire Japanese market right now, right? So
Yeah.
Yeah, so I guess it's very important towards the points that you guys have made to actually know that when you read this, right, you need to verify that what they say is very true, and that comes from doing the homework and the understanding, because the news article, right, can say that, like, the can say like Apple phone is not going to kill. But if you're going to see like the next 10 purchases of all your friends around you, right, they're starting to buy iPhones. I think the iPhone 4, when it came out, that was when it started to get mass attention, right? Because they did the redesign, everything was like go, 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 right? Then when you started to see the huge uptick in people who started to buy the iPhone, then it's no longer a case that Nokia is going to succeed, because it was very clear back then, without reading the news, right, that Apple was going to dominate, and then we see that right now with the car market, right, where all the news outlets, especially the FUD, they're saying, oh, nobody wants to buy, Toyota, Honda, everybody wants to, nobody wants to buy Tesla because they're electric, etc. But that's not the case. When I go now in Singapore, right, I just went to one particular estate in Singapore. The entire car park is filled with Teslas.
Yeah.
Oh
And
shit.
Nice.
even in Malaysia, right, Nico? That day when we were driving in Cyber, we saw like 3 Teslas.
Oh shit.
Wow.
Yeah, in
Yeah,
Cyber. Yeah, in Malaysia, Tesla is like 400K. Yeah, just say 400K Malaysian for a fucking Tesla. It's fucking expensive. It's more expensive than a BM, and you have like
Mm.
yeah.
three in Cyber. So yeah,
Wow.
yeah.
Yeah, and I was sitting down, having my wonton mee, right, thinking about Tesla, and lo and behold, proof of scale. That I was sitting down for like 20 minutes. I think 5 Teslas drove past me.
Yeah.
Mm.
And so like these are the type of like micro things, right, which I think most investors do not pay attention. They put way too much credibility and attention on media without actually going down to the ground level, right, and then looking at things which actually matter. Because like even for value investors, right, we also I guess now, Nico, maybe I can ask you the question as a value investor, right? You mentioned that you don't check the companies often, right? But
Yeah.
what are some of the crucial things that you look out for, which might completely change your investment viewpoint in that company?
Right, sure. But then just before I get into it, I would like to just add on to what you were saying about your wonton mee shop and the Teslas that pass by. No, I think it's a very key point as well. Like, as in, if anyone's interested in the Fidelity Fund, Peter Lynch is a legend for what he did, right? And he went into these sort of details. He would literally sit outside of the factory and count the number of lorries that enter and leave the premises before he makes a decision to invest in the company or not. So like, to go down to this kind of grassroots levels, right? To just be able to get that extra confidence that he needs to get into it, and then he becomes an investing legend over the years. I think with 70% or something like that. I can't remember what the exact number is, but yeah, that's
I
another
I
side
thought
of
Nico, you
investing.
were gonna ask him what wanton mee shop.
Uh,
That one later lah, that one
Singapore
after the
Singapore only
call.
got a handful.
That one after the call lah. Later we can discuss. uh, but then, yeah, I mean, what would make me change my mind is basically, again, like what I mentioned earlier, is cross-checking between the previous report and the current report, whether what they said they were going to do, did they follow up with it, or did they change their mind, and especially if there's a lot of change in board of directors and leadership lah. I think that's quite a crucial aspect that I would, then I would have to reevaluate my decision, because otherwise, right, I think most of the time I take a very long time to make one investment, right? I do a lot of research, I read a few years worth of annual reports and see if their progression is as per what they predicted for themselves like 3 years ago, 5 years ago, right? And if those things line up, it gives me a lot of confidence to be able to invest. And then when I do invest, I kind of just turn off all media outlets and just let my money sit within there, and then hope for the best. Not to say hope for the best lah, but it gives me the confidence I need to stay within the company. And then later, when they come up with the next annual report, then I measure. That's the time when I pull out my ruler and start saying, okay, did they match up to what they were saying before? How is the growth going? And what other things have changed from the year before? And one good example I can give you, right, is there's this company in Bursa, Malaysia, and I think Andrew knows that's my favorite stock, right?
Mm.
So they actually operate in Malaysia and in Africa. They have a manufacturing facility there as well. and then they were growing quite well over the years. And then I read in the previous annual report that they had plans to expand operations in Ivory Coast in Africa, and so they were going to have to discuss with the board and get everybody's approval, and then they want to expand their operations. So at this point of time, I was already invested in the company, and I knew like, okay, that's actually a good sign, right? If a company is going to be expending more money to expand their operations, that means future cash flows are going to be increased, future revenues and profits are also going to be increased, right? So it kind of gave me more confidence in the company. But during that point of time and until now, they I think just finished construction, right? There has been so much media outlook going like this company is taking on so much debt, this and that, blah 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 blah. And again, the media that puts out these articles, right? They don't actually show the reader that oh they're doing this so that they can expand operations and so that they can generate X amount of future cash flows. They don't do that. They just say that oh this company is piling on their debt, they're in so much debt and stuff like that. So it that takes away the confidence of the investor when you read that kind of thing, but you don't actually know that this has been something that has been in the pipeline for years, and it's actually something that will expand their market share by a huge amount in years to come. So that's why for me it's like I just check it once a year and I know if they said they're going to build a facility this year, they started construction, okay, that matches up, right? So just either I can maintain my position or I can even invest a bit more into that position. Yeah, but
Yeah,
that's pretty much it lah.
yeah, I think it's very important that investors actually focus on execution
Mm.
rather than the superficial lah. Because that's I guess the truth. That's also very similar to growth investors, right? You want to ensure that the company that you're investing in is actually putting in money to invest for future growth, because it's very rare for you to find a company that can just grow simply by increasing the price lah, right? And even if they can do that, then sometimes the market size is quite limited lah. Case in point, Coca-Cola, right? So, um, yeah, like one thing which Nicole mentioned, which I think is pretty useful, is that content doesn't just come from news outlets. And he took the example from Peter Lynch of going to the grassroots levels, right? And there was one particular book that is only written 6 pages long, right? And it's what we call the Scatterbot Approach, and that was popularized by Peter
Mm.
Lynch,
Yeah.
right? In this book, Common Sense and Uncommon Profits, right? And it's only 6 pages long, right? But that is probably one of the best chapters in the entire book, talking about how many people, right? And Peter Lynch actually used this to very huge effectiveness, where people work in a particular company, right? Let's say, for example, you work in a company, Shopee, right? And then you are clearly seeing that your market share is increasing in the online space, and you can actually see firsthand, right, in real time, right, that the losses per order is going down, and then at the same time you see your share price go down by 50%, right? You have an edge that no single analyst have, to actually consider whether or not you should invest in your own company. Because if your team, right, is growing by 3 to 4 times, and then you can see departments growing, and money is going to come and grow, and then you can see very clearly, right, that for example, the company is going to dominate the next 5 to 10 years, right? Then maybe you should consider investing in that company, in the company that you work in. And Peter Lynch was very famous for saying a lot of people they throw away their alpha in their own work that they're in, because it's very clear that they have an edge, but they don't use it,
Mm.
right? So, and it's so much better than what analysts can actually analyze, because analysts, we only can look at numbers, right? We cannot actually like go down to the execution part of things and don't have the insight of like in that particular industry lah. And takes a while for you to cultivate that real time insight, right? So I think, and that's why I say that's a very important point that Nico, you have mentioned. Now I would like to shift our focus to Andrew, because Andrew, I would like to ask you, right? Because I mean, it was very tough for you to go through that process of the flood, that
Mm.
you had, right?
Yeah.
And then like for you, right, during that particular period, right? Were you still actually actively consuming content? Because you are a growth investor, right? And it's quite, and usually growth investors, right? We tend to keep up quite often, right? And then
Yeah.
during the time that you had the downtime, right? How did it like your investments? Did it actually affect like before and coming out of this unfortunate incident, right? How has
Mm.
that changed your perspective in terms of content consumption?
Not really much lah. I mean, like the flood can destroy the things, but it doesn't change me as a person. Overall, I'm still a very emotional person. But funny enough, right? I'm very emotional. Nico knows lah. I'm very emotional. I can cry on the football field if I've let go one goal. Right?
Amen.
Yeah, I'm a very emotional person. I can scream for no fucking reason. I can also yell at my friends for playing futsal. I yeah, so it's I'm very emotional. But one more thing is that it's weird when it's in investing, because I don't give a shit about my emotions in investing. I almost have no emotions in investing. Like when the stock drop, right? Like let's say like Ryan said, Palantir dropped 30%, right? My entry price was like what 23, 22. So we're almost the same boat now. The fucking Titanic, right? It's a sinking ship, but I know it will sail once again. Because I have high conviction in it, so I don't feel down or anything. It doesn't affect me emotionally, even though like when the flood happened and stuff, right? I was very emotional. I was obviously quarreling with my family and stuff like that, because the water level was rising and no one wanted to evacuate, right? And I was like, I want to evacuate because the gas stong and people are getting, the electricity is dying off and stuff like that. So in life I'm very emotional, but when it comes to stocks, I don't know why. I just don't feel the emotions. It's very weird. Like I can see like all the FUDs that are being thrown down, like Alibaba, right? Like the delisting stuff, right? I'm like, okay, cool. I don't give a shit. I don't know why. Maybe it's because that I'm okay losing the money that I invested in, although I the money that I have in my bank is like barely can last me 3 months of emergency funds, and most of my money, about 80%, is in investing in stocks, right? But still, I just don't feel the emotions. I Maybe I need a therapist. I don't know, but yeah, that's about it. And to consume the media, yeah, I was consuming it, but I really didn't change much of my views. Do I need the money more today than before the flood? Yeah, probably, because I need to buy a house for my family and stuff like that, and to move out from this place because it's been happening so often, right? But generally, if I set a plan for, let's just say, if I my plan to hold Tesla is for at least until 2030, or when they have fully developed the FSD and everyone can use the full self driving, and even then I'll still hold it. So it was a lifetime commitment to them, and I never ever thought of selling my Tesla shares, even though when I in need of dire money, I will always think like there are other ways of making money, so let's just use the alternative instead. Until I am fucking dry in my bank account, then only I'll think of it. So it doesn't matter where the price takes me. Up, down, left, right, doesn't give a shit. I don't give a shit. Yeah.
I think, well, we've definitely discussed a lot today. And thanks so much for all of your inputs. Like before I close the session, right, I would just like to summarize for our listeners who have been listening so far. I note down some of the key points lah, to
Mhm.
summarize the entire session. I think, um, you know, everyone has different types of investments that they like and love, and I think that media tends to affect a lot of emotions, specifically if you're in investments which have draw a lot of attention, right? So it really, when it comes down to it, right, when I listen to the three viewpoints that you guys have, it really comes down and boils down to how much conviction you have and homework you have done into the investment idea to remove the emotion from noise, right? So I think emotional management was a key topic that we talk about. Like, don't let I say be very mindful of your emotions when you are looking at the stock price, looking at the news article, and try to separate that away from the fundamentals. And then also, I think it's Nico has also given a very useful input, is that you also need to choose a style that suits your
Personality.
character.
Yeah.
Yeah, because um i- like even though value investing, right, has not been performing, right, it doesn't mean that it's not a viable vehicle, because sometimes even if growth investing does better than value investing, right, not many people can actually execute growth investing to perfection, because many people, from my experience, right, tend to FOMO sell, FOMO buy. Then it's actually not that easy to stick to your guns in growth investing lah, because it's quite volatile, right? And that also ties to emotional management. So I think it's very important that you are very mindful what type of person you are and stick to a style that you are confident in enough to see it the long term. Because businesses investments, you don't 10x your money in 3 months. That's not how it works. That's a casino, right? It just takes, yeah, like there's all this, like, and the casino changes over time lah. Like, when I started the casino was what was the casino back then?
The manual pull one lah. You have to pull
Uh
manually. Now it's all electronic, and they just fucking take your money all the time.
yeah, so
The
it's
slot
like,
machine. Nico knows
yeah,
lah.
you
Oh,
yeah,
Sorry.
all these like ideas of 10x, 20x, 30x in 3 months, it's not new. I've seen it come and go so many times. I think back then, it was about it was everybody was saying, Fang will bubble, they're gonna pop, and now they're the largest companies in America right now, right?
Yeah.
And then in '08 it was houses lah,
mm,
that was a casino back then lah. Everybody flip, 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 then all don't want to work. Right? So
Mm.
it's nothing new. The people love gambling, and that's how it is. And today now we have NFTs, right? And then before
Yeah.
NFTs we had DeFi, and before DeFi we had GMs, GME, we had AMC, right?
Mm.
So
Yeah.
like the more connected we are, right, I can tell you the gambling platforms are just going to skyrocket lah. So I won't be surprised if this year we have a DAO DAOs coming into the gambling space lah. So I think it's very important that you learn how to differentiate between a casino and an investment, because these are two completely different um fields that you need to take into account for lah, right? So and also one more point that I like to take away is also you need to be very mindful about what type of age that you have, right? Because if you have an special insight, be it in your job, in your work, then always like the mantra that was advice given to me, right? That you will never go wrong buying what you know,
mm,
because it is very, like, I've known many people, right, who made money in property, made money in equity, in very narrow selection of assets, right, because they know what they're buying. So I think that's one of the very most important things when you're doing an investment, right? It's not just about equity or stocks or like value or growth. It's very important that you know what you're buying, and that comes with a lot of insight in that particular area. And you don't need to be very broad to make a lot of money in investing. You can be very narrow. You can choose a particular niche that you have, right? You have insight, right? And that grows and changes and morphs over time, and you can make a lot of money in that. And that comes down to your circle of competence, which is what Warren Buffett is very famous for, lah. That's why he doesn't touch tech stocks, right? I mean, his company is worth close to half a trillion, right? So that's how he plays his game, lah. His edge. And also one last thing is also your timeline. I think this is one thing, right, that many new investors don't actually focus on, and that is their timeline. They always expect things to happen 3, 4, 5, 6 months, away, and they're very impatient to get their returns. And usually, this is usually a sign that they're not paying enough attention to actually their own personal finance. From my experience, because I'm inside personal finance, right? And if most people are focusing their attention on growing their net worth, right, then usually somewhere in their life is lacking, and this timeline usually can be stretched if you actually focus on yourself. Because no matter what the market does, right, especially for very young people, it's very important that you don't neglect your own income and your own career. Because apart from investing, you also need to invest in yourself, right?
Yeah.
Apart from investing in all these securities, property, all this, the investment that you can never go wrong and will give you your highest return on capital is yourself.
And no one
All right,
can
and
take
that,
away from that. No one can
yeah,
take it away from you.
precisely.
Yeah.
Precisely. Even if the inflation rate goes by 10, 20, 30%, who really cares? Because your human capital and your human time, if you invest in it, it is the most inflationary proof asset that you have. Right. And
Yep.
there's a saying, everybody is a time billionaire. So how you use your time is very important. And if a lot of the time that is spent now on a lot of noise that doesn't really matter, maybe, my suggestion is, look at some things that you can improve on. Right. And I think that, and Ryan, has done that very effectively, I think, over the last 2 months. Right. So I would like to close the session, right? Because I think it's more than an hour. So maybe I'd like to ask, like, all three of you, maybe we can start with Andrew, right? Like, where would you advise people, right, to look for good content with regards to investing?
For me personally, right, good contents are everywhere. The internet is so wide, you can go anywhere and look for good content. But it's how you pick the content that suits you, right? Like Nico said, he's a value investor, Ryan's a growth investor, right? You have to look for content that suits you and your investment style. Right, you don't want to look for something that's like a GME page, right? You go to Wall Street Bets. That's not where you want to be looking at stuff, right? Because you are not in the casino game. If you're in the casino game, then yeah, you should go there, right? Because they know when to pump and dump. They're the best. But if you it really depends on what you are looking for. Good contents are everywhere, but you just need to know how to filter them. Even on Wall Street Journal or whatever, right? There are one or two good articles. It's hard to find, but you can still go there to look for. Or if you just want really good content, you can go to Ringgit to Dollar lah, right, Nico?
Let's go.
Oh no.
I'm kidding. But yeah, you can go to anywhere. The internet's so wide, right? But pick a few people that you like to listen to. And very important is where they put the money where their mouth is. That's one. And the other one for me personally is that they don't give a fuck if they get cancelled tomorrow. Because that's when they can really speak their mind. If they are worried that they're gonna get cancelled, it's gonna be tough lah. It's gonna be tough.
Yeah, I think that's one actually very good key point that you mentioned. That the more a person is very honest and upfront, the more credibility he gets. I
Mhm.
think that's why a lot of us we do enjoy content from Chicken Genius because he's very frank about his investments. So maybe we
And
can.
he is himself also lah, right? Like he says like all his sexual jokes and stuff like that. He is very authentic in that way lah. So I enjoy that because I'm a clown. So yeah.
Yeah, like I definitely respect Ken a lot because he puts himself out there. He puts his money where his mouth is, and most importantly, he is very transparent with his trades, which I don't really see many people doing that. In fact, I don't see anyone doing that, right? Which is a very stark contrast to Bloomberg when they say markets are crashing, but then when you take a look at
F.
the 13F, right, I
Yeah.
don't actually see where they put their money where their mouth is lah. So that's where you know that if their income is coming from making noise, then maybe you shouldn't be listening to them, right?
Yeah.
So now maybe I'd like to ask Ryan, like, where would you advise people to go if they're looking for good investment content?
The most important quality I feel for all content creators is honesty and transparency. So as you mentioned, that's why we all respect Ken from Chicken Eating Singapore, because he's so transparent about his trades. He is very transparent and very honest on where he gets his information from. So yeah, there's a lot of content out there, like what uh, Andrew has said. But find what works for you. You gotta understand yourself first. Know what you're dealing with in terms emotionally, in terms of like your emotions and all. So understand yourself as a person, and then find the content that works for you. Find the investing style that works for you, and then you go for the kind of content that is able to like play around your investing style and emotion management, because investing is for the long run. Unless you're a trader, then I've got nothing else to say. But but you like, if you're gonna last this long term game, then you probably have to find something that's sustainable, something that you won't feel like shit looking at every other day. And yeah, so it's just about patience. It's about hodl, and it's about how long you can last emotionally and psychologically.
Yeah, I think that's very good advice. How about you, Nico? Like, you know, I like to ask you because as you know, you're very different from us in terms of value investing, right? Like, um, if a brand new investor come to you today and ask you like, where can I go to, right, to look for good investment content? Where would you point them?
Here comes the unpopular opinion. So I would point them to reports, research papers, and books, because I mean this might be like it's unpopular because it's not the kind of content that people want to consume on a daily basis. I think it's easier to just hop on to YouTube and find someone who's speaking up on this stuff. But I would still say that books will give you the best content, and yeah, you should be able to judge from there, because at the end of the day, my personal belief, right, how I approach consuming content, right, is that I don't want to limit myself to the comprehension of the presenter. So, for example, if there's a book, right, either I can read the book or I can watch some guy's 15-minute uh, summary of the book. But if I listen to the 15-minute summary of the book, right, I'm only going to be exposed to what that guy caught on to. So I'm limiting myself to that guy's comprehension. So I would always say that, go read actual books and make your own summary, your own judgments. And we always do reread books at different points in your life, right? Because you're a more experienced individual, you've grown over the years, right? When you read the book for the second time, you'll pick up things that your younger self didn't pick up on. And then you can improve yourself from there on. But otherwise, otherwise, I would still say you can go and search on YouTube for content creators, but it's very important that the content creators you're subscribing to, that you're following, that they are honest, open, and accountable. The biggest headache I have with content creators is accountability, because being on the internet, you have no accountability. There's no repercussions. You can say whatever you want. And like just now earlier, I think someone mentioned Jim Cramer, right? That guy just makes so much noise. And he talks shit about one stock one day, and in a couple of months, he's going to be praising the same stock. So to me, what kind of BS is that? I don't have the time for this kind of BS. So if you have time for it, then be my guest. But accountability and openness of the presenter, right? I think that's of the content creator, right? I think that's very important when you're filtering through who you want to, listen to or follow. These people are online, they do not have any accountability issues, there is no repercussions to what they say. So you better be careful with who you listen to. Lah. Yeah.
Yeah, I think I think that's very important that all of us actually drive the same point, right? That at the end of the day, as cliche as it sounds, you need to have and do your own due diligence. Whatever you're investing in, don't just invest because someone says it, because that is the oldest trick in the book that has been very popularized on Wall Street, lah. And today it's just going into YouTube, and basically it's the same thing. Because you really do not know, as what Nico has mentioned, the accountability and where their agenda lies. Because sometimes when you go to YouTube and you see 200,000 subscribers, sometimes it doesn't mean the subscribers are real, right? Because there are
Mm.
many bots outlets out there that they just purchase subscribers, and then they basically cannot execute. They have a lot of grand visions, and then eventually they don't execute uh, at all, because they have no accountability, right? That's why we see a lot of bots on many social platforms. And I think um, what everyone here is trying to say is you need to have your own independent thinking, develop independent thinking about your own investments, right? And it doesn't have to be popular, it just has to work for you, because everyone is different. It doesn't mean that you get less than the S&P 500. It means that you're performing badly, right? It just means that you are in line with your own um you're in line with your own investment style lah, and sometimes, doesn't mean that value investing underperforms for like 15, 20 years, doesn't mean it underperforms forever, because macroeconomics change, things change, right?
Mm.
So, and the world is very constantly changing, so it doesn't mean that what happened in the past will happen in the future, because sometimes the tide can change, right? And I think the important thing to note, right, is going forward, right, is that you understand yourself, don't neglect to invest in yourself, right? And then eventually, good content is quite relative, right? So end of the day, whatever content you're consuming, whatever book you're reading, always come to your own conclusion, and don't always take people's word for it, because end of the day, no one is going to, you know, end of the day, as what Nico mentioned, no one is going to bail you out if your investment goes to shit. The one
Yeah.
who is going to take the brunt force of that is you, right? So it's very important that people know that and understand that where they put their money, and that's why we all always like to say, make sure when you invest safe, right? So I would like to thank everyone here, on for coming here and sharing their thoughts on mainstream media. I hope our listeners have gotten some value from this today, and we thank you for joining us, and we hope to see both guests again. So if you like to follow them, right, Ryan is on here, his Instagram is Books and Stongs. Then if you like to follow Andrew and Nicole, they're on YouTube as well as Spotify. Their tag handle is Ringgit to Dollar. They have a very wonderful podcast talking about very individual securities as well as stocks as well as economics. And of course, I'm also on Instagram at Adrian Goes Global. So thank you so much, everyone, for coming here today. And we hope you enjoy this session. And we'll see you in the next podcast.